Yes, this is like an Xag, yeah, and I'm here to show you on how this move came in, that buy entry. Yeah, this is Lxg Concept. Lxg Concept from the academy that we call Blue Sky Academy. Yes, Blue Sky Academy. Blue Sky Academy. Yeah, now let's make a quick recap. Yeah. So this is a concept that mostly bases on higher time frames. It's like top-down analysis. Yeah, it's top-down analysis, just that the way we follow our time frames, it's kind of precise. Yeah, mostly basing on market time frames. Yeah, not structure at this time. We focus more on market time frames. Yeah, that we might call time frame coordination. Yeah, as here we have to look for that kind of structure or V to V or break of structure that is being formed or that has been formed by either monthly. Yeah, if monthly hasn't formed it yet, then we can shift to weekly downside. So we have to look for that break of structure in either monthly or either weekly. Yes, so we can look for that upside break of structure, or if not that one, then we can look for this is a bullish break of structure, then this is a bearish break of structure to the downside. So these are the structures or the patterns that we look for, that will establish to us the direction where the market is heading to. So now, as in here on USDJPY, I want you to observe which kind of break of structure or recent break of structure that we had in this kind of pair. Yeah, so I will draw for you what I see. Yeah, just swing highs and swing lows. Yes, we never broke here, so this is kind of an inside formation. Then they broke. Yes, on breaking we have this small guy inside here. Yes, we have that small guy inside here, and I see it shifted off with this big momentum. It came back here. It made for us this kind of pattern. I think you can see the recent area of liquidity that we have. I think you can see the recent area of liquidity that we have, which is this one. Yes, which is that one. That is the recent area of liquidity that we have, whereby let me label it. It has to be on the candle wicks. It has to be on the candle wicks. Yes, on proper candle wicks. There, exactly there, and on top. So I'm going to just go forward with the time frame coordination. I'm not going to explain it more in this video. Yeah, it will be established to you guys in the coming videos about this Lxg concept. Yeah, Lxg concept. So let me brief you a little. We have our time frames that we use. We have monthly. Yes, we have monthly, and below monthly we have weekly. So meaning after getting the area of liquidity, the recent one in monthly, now we are supposed to shift in weekly to get the liquidity engineering on the low. Yes, and on this high, whereby this is our direction where we are going. So we have to get liquidity engineering of weekly on this low and this high of monthly. So we shall shift here in weekly time frame to get those areas of liquidity, that we can label. So the areas of liquidity, the area of liquidity that I'm trying to mean, yes, let me just show it to you here. So this is the area of liquidity we must look for. I think you guys are familiar with this if you have watched some of my previous videos. Yes, this is the law that they made. They made this high. They broke structure here, and after breaking structure here, and then now the market shifted off. So this second last low before making this extreme low, it is our liquidity engineering that we can follow, or that you can mark. So let me put it in invert form to have the upside one. So still this is the high that was formed, the low, break of structure, and after getting the break of structure they shifted off. So this is the liquidity engineering that we want to label. So now let me correct all this, and I can delete now. This is so it's done. So now what you're supposed to do, it is to label the weekly. Right now we are in the weekly time frame. So now we are just supposed to have to label the liquidity engineering on the low and on the high. Remember, this is the low of monthly, this is the high of monthly. So let us see if we have any liquidity engineering. I will use the line chart. Yes, I will use the line chart. Yes, we have this one. I will make that one a dotted line and a red one, just to simplify. And now this is the liquidity engineering on the upside. So now let me put it back in candle. You can use the candle chart to label the liquidity, but mostly the liquidity engineering, it is mostly favoring if you use a line chart to label them. So first, the constant time frame, or the time frame that has given us direction, it is monthly. So now the time frame that is supposed to give us the liquidity engineering, it is supposed to be weekly. Yes. So a simple disclosure to you here. So let me say that this is the area we have got of monthly. So that is the direction I'm supposed to follow. Now the time frame which is supposed to give us the liquidity engineering, that is weekly. Now most people wonder, remember, let me say you might want to sell from these areas. Okay, you might want to sell from those areas, and now you can't wait for monthly to come back here. That's a long time of waiting for the market to come back in the areas where you want to sell from, and you sell back below. Okay, so now here I'm going to make this simplified for you on the way you can buy trades from this side to this side, then you still sell it back below. So now, sorry, the internet was teasing around. So now if this is monthly, the time frame that has given us the break of structure or the direction. So now the time frame that is supposed to give us the retracements here and the continuations, that is supposed to be, the next time frame below, monthly, and that is what? That is weekly, as you see down below there. That is supposed to be weekly. So meaning that you're supposed to get our weekly break of structures to the upside. You have to look for these weekly break of structures to the upside. If you have not yet seen any break of structure to the upside after seeing this, any break of structure of weekly to the upside, selling is not yet in favor of us. because this weekly, it is the one that will confirm the retracement to this side and the continuation below. So here we have to look for this weekly break of structure that we can use to buy to come back in these areas, and in these areas we shall see on how to sell in the coming videos. Yes, still you shall have to look for that selling area of liquidity of weekly that will pull us back below to this low. That is the way how the market moves. I think for those people who have experience in the market, you can relate to this. So as quickly as possible, let us go to see now how this market is reacting for us. Now, as you've seen, this is the impulse to the downside, and you have to shift in the weekly time frame which we are in already. Now we have to look for that break of structure to the upside to confirm that the retracement now is in play. Yes, that is the low that was made. Now before heading this side, we see that we had this break of structure here of weekly. Yes, most people will want to sell from here, but this is wrong. This is wrong. That is so wrong. Just listen to what I'm trying to explain to you about. Remember, I told you have to receive this now. You have to receive these areas of liquidity or break of structure of weekly. Yeah, like a retracement. Yes, because now I think this market is still retracing back until it reaches one of these red lines where it will finally sell from to this low. Yeah. So now I'm sorry about the background noise. Yeah. So right now I won't go so deep how the market played up in this zone. Actually, let me use this box. I won't go so deep on how the market played in this zone. Yeah, all the pullbacks in this zone I won't explain here because we have some. I see we have some. Yes, I see we have some pullbacks there, but we can't focus on that one as I've told you. We have to look for those areas of liquidity to the upside of weekly. Yes. So now let us find that structure where it is. We have that high that was made by weekly. We have that low that was made by weekly. We have this high that was made by weekly. We have this low that was made by weekly. And now here we can see this break of structure or even candle formation breaking above this week in weekly. I hope you can see. Yes, this is the bullish break of structure that I've told you about that now we are supposed to look for if monthly has given us the direction. So we are going to label that area of liquidity of weekly. Yes, we're going to label that area of liquidity. We shall use blue and a straight line, not dotted. Now we are going to also label the low. Yes, we shall also label the low after marking the low. Now, the time, where is the high? Yeah, that is the high. And now that is supposed to be our TP if we are going to buy in this zone of weekly. Yes, that will have to be our TP. I hope you can see. Yes, yeah. So now the big time frame we have, it is weekly. Yeah. And now if weekly has now established to us the area of liquidity or the break of structure in the upside, this is weekly. Now which time frame are we supposed to drop down to? The next time frame below weekly, and it is that one. So now what are we supposed to look for in that time frame? Yeah, we are supposed to look for the liquidity engineering on the high of weekly and on the low of weekly, okay, whereby we shall wait for the market to retrace in those areas and see if we can have any buys in those points, because we want to buy back about to this side of monthly, and we want to find the way of buying back to this side to avoid overweighting. So now we shall shift to daily time frame. We shall shift to daily time frame to see whether we have liquidity on this high of weekly and on this low of weekly, but in our daily time frame, as we have shifted, as you see below there. So this is the liquidity engineering I see. We are going to use red and still dotted lines. Yes, if you get difficulties in seeing those levels using candle chart, you can shift to line chart. I hope you can see that last break of structure, then they shift. Yes, the second last break of structure, and then they shift. That is supposed to be the liquidity engineering. So let us see if they tapped one of these. So if this is weekly, daily has labeled for us the areas of liquidity, meaning now the time frames we have here is weekly and daily. So meaning if weekly has established to us the area of liquidity, as you see, so now which time frame is supposed to come back below in our liquidity of daily, that is supposed to be daily still, because weekly has established to us the direction. So the time frame that is supposed to make the retracement, that is supposed to be daily, retracing back below to this line here. Yes, that is supposed to be daily, retracing back. And the daily is the one which is supposed to give us the what? The continuation to the upside. Yes. So let us see how the market reacted, because all this is past data, it has already happened. We just want to see how the market has pushed so high and where it is heading. Yes, and where it is heading. Okay. So now we can see that the market never tapped our zone. Yes, the market never tapped any of our zones, we can see. But now I want you to witness, as I've told you, the time frame that is supposed to make a retracement and the time frame that is supposed to make the continuation. And if you remember very well, that is daily. And now you can see that daily has shifted in one of these areas. If you can see it, that is well and good. Let me just help you to label it. Let me first delete this high to avoid over confusion to you guys. So the level, it is here, the level of the shift, it is here that we have of daily, confirming to us that the market might push back to this high. Okay, because now the time frame that is supposed to give us retracements and continuation has established to us a shift in a different direction that we still have to head to if the market has failed to reach our what? Our liquidity engineering of or any of these lines. Yeah. So now we have those lines there labeled to us. This what I'm labeling. Let me use green, and this what I'm labeling. This is a daily area of liquidity or the recent break of structure that we have in the market. That is you have to listen proper. We have a small structure here inside. But if you know how to label these highs and lows, you will know that that is the high and that is the low that led to the break of structure. You know that that is the low that led to the break of structure. Yes, and this pattern is just like this. That pattern is just like this. That pattern is just like this. Yes, yes, it is just like that one. Just that this one doesn't have this small. This one doesn't have this small push here. Yes, but they are the same. Okay. So now let us see. Now the recent area of liquidity we have. We are breaking down the structure. Remember, from the higher time frame to the lower time frame. Now the recent area of liquidity we have, it is daily. Yes, and if it is daily, let us put it down below here. Now the time frame we have to scale down to the next time frame to daily. That will label for us the liquidity engineering, and it will do for us the retracement and the continuation. It is supposed to be H4. Yes, because it is the next time frame to this daily time frame. Now we shall shift to H4. We shall shift to H4. Yeah, that is the high, that is the low. So now you're supposed to label the liquidity engineering. Yes, the liquidity engineering. I'm going to show you everything. That is supposed to be that one, and it is supposed to be this guy here. Let us shift to weekly for you to confirm that what you are labeling is right. As you can see, yes. So now we have to wait for the market to retrace to one of these levels. To shift, yeah. It has to tap on one of these levels and it shifts in a specific time frame. Yeah, the time frame coordination or the advanced time frame coordination. In the next video, I will explain more about that advanced time frame coordination or advanced directional bias. Yes, so that is the high. Now we have to see. You can see very well what I told you on how the time frame has to retrace back. That is the high. Let me do it properly to avoid confusing my people. This is the break of structure. This is the break of structure of daily. And if that is the break of structure of daily, we have to wait for weekly. No, we have to wait for H4 to break structure heading to the downside because of this daily going to the upside. Now the time frame that is supposed to give us the retracement, it is supposed to be H4, and now we have seen H4 breaking structure. Now we can know that now the market is what? It is retracing back below, and it might want to go maybe here or here. Okay, so now if we receive this break of structure, we can come back and maybe sell. If the market provides opportunity, we can sell from here to this level. Oh, let us see now what the market did. We shall explain more about everything. Okay, I say again, the market has given us the break of structure over this H4, and now the time frame that is supposed to give us a shift, that is supposed to be this is H4, it's supposed to be H1. Don't worry about the time frames. I will make a video soon explaining all the advanced directional bias or time frame coordination. So don't worry about the time frames that I'm using or anything. So after tapping on this level, I'm supposed to wait for 1 hour to shift with either an inside formation or outside formation, or sometimes they might shift without any of the formations, so we can take on any of the levels. So now let me just pull the structure, I show it to you. Yeah, so we have to wait for that H1 to shift. We have to wait for that H1 to shift. Yes, we have to wait for H1 to shift, so I can label this low made. I can label that low made because we tapped on this liquidity zone. So now we are supposed to wait for H1 to shift. I will explain the time frames in the next video. Just have a look about what I'm explaining and don't judge. Just feel free to look. Yeah, and be ready to grasp everything in the coming videos. So now we see that the market, I see the market that it has shifted, and where is it going? Remember, we have to wait for that shift with either inside or outside formation. So I see that the market has shifted here with that inside formation. Yes, the market has shifted with that inside formation. Yes, the market has shifted with that inside formation. So meaning it has to come back in this inside formation to buy to the upside. But how is it going to come back to this inside formation that we have? That is supposed to be this one. I will make it a straight line and a black line. Yeah. So if you can see here, we have this H4. We have this H4 break-off structure there. We have that H4 break-off structure there. So we shall shift to that H4 break-off structure. Yes, you can see it. So if H4 has meant for us that area of liquidity, so now which time frame are we supposed to scale down to? Yeah, that is supposed to be H1 to label the liquidity engineering. And if H4 has established for us those that area of liquidity, the time frame that is supposed to make the retracement and continuation is supposed to be still H1. And remember, we have made a shift from the downside heading to the upside of H1, meaning that we're on the right side. So we are going to go to H1 to label the liquidity engineering on that H4 in this H4 zone. So this is the low. I will make this level which color? Blue. Let me make it blue for easy identification. Even this one blue. So the liquidity, that is the low and the high of H4 to sell down. So the liquidity engineering, it is this guy I see here. We shall make this one a red line liquidity. Yes, and we also have that guy. We are near each other. If I shift to line chart, yeah, you can prove that. So we have to wait for the market to come back on either on that level. Yeah, so as long as now this is H1, so M15 has to come back on that one of these levels, and it shifts. And after shifting, we take the entry on liquidity engineering of M3. Yes, I will explain more on about the advanced directional bias, or on the way we use these time frames in the next video that we shall share to you guys here. So now when the market reaches on either on this level or this one, we have to shift in M15 and sell on liquidity engineering of M3 back to this inside formation for buys, because we have already reached this zone or this liquidity engineering of daily. Yeah, that is the way how the time frames react in the market structure, because time frames are the one that form for us the market structure. Okay, yes, so now we shall see if the market tapped with M15 shifting. Let us see. Never tapped. Never tapped on those liquidity engineering lines. Yes, but it shifted, I think, in M15 because it was already inside H4 area of liquidity, the low and the high. Yes, yeah, I see it has shifted. I see it has shifted. It has made this high, it made this low. Yes, it broke above here with candle closures, and then it still broke below here with candle closures, confirming for us the shift to the downside, confirming for us the shift to the downside. So this is the high we have. This is the high we have, which I will make an orange line. So let me assume the market was just like this. So that is the pattern you will look for. That is the shift of M15, whereby now we are supposed to go in M3 to label their what? The liquidity engineering. So this was our H1 where we are supposed to buy from. So now we are going to look for TPs. Either if you are going to sell, our TPs where they will be and where we are going to buy from. The other one was H1. This is H1 inside formation. So we can label to here M15 liquidity engineering. Yes, so the TP might be here for this sell, and still the buys will have to be on that point. Yeah, stop loss just below here. So now let us go to M3 to see if we can get that sell on the liquidity engineering. Yes, where is the pattern? It is here. Yes, the liquidity is there. The liquidity is here. So now we have to sell from that point. Stop loss just above that high. Stop loss just above that high. TPs here, and remember, if we reach here we have a buy setup here. Yes, we have also a buy setup there. So let us see. Yeah, the market has activated us, as you see. Let us also include this buy structure we have. This buy structure we have, and this buy structure, it is going up to weekly. The weekly high, remember, we shall see. Let us see how the market reacted. Yes, we have this sell. Yes, we have that sell. We have that sell. Yes, the market is moving. Okay, it has deleted, or it has tapped the TP of our sell pattern or setup, and now it has activated for us the buy setup. Okay, it has activated for us now the buy setup, and that is the push that came in on Monday midnight. Yes, and now that TP, it is heading to weekly. That TP, it is heading to weekly. Wow, this where it is. Risk to reward in one day, because it has made all this impulse from here. This is just one, as you can see, Monday 6th is October until here, all those pips. Wow, so far we have 22.46 risk to reward. Let us see where our TP is supposed to be. Let us see. Yeah, This is the weekly. This is the weekly high. We are expecting that structure to head to. This is the high I'm expecting that structure to head to. Yes, that is it. Yeah, that is how this these two setups came in. We have other it's like a simplified concept if you know how to use it. Yeah, it's a simplified concept. Now the other one was weekly, so the time frame that you are supposed to make continuation, because this is a weekly area of liquidity that we have. Now the time frame that is supposed to make continuation is supposed to be daily, and it's daily. It is already playing, as you see. Yes, and now I think, if this market closes above here with daily, remember daily, it is the one that is forming for us the continuations and the retracements. If weekly has established for us a break-off structure, so now if this candle closes above that high, I will redefine our liquidity engineering on H4. Yes, on H4. Let me should I delete all this? Let me just delete this one. I label for you the liquidity engineering. I will want to wait the market to tap, and after tapping that liquidity engineering of H4, if the market closes above this high, so I will wait for the market to come back on that liquidity engineering, and it shifts in H1. Yes, this is daily liquidity engineering. It is H4. Yes, H4, it has to shift. Yeah, then H4 tapping there, then H1 has to shift with either inside or outside formation or no formation, then that shift, then you take the entry on M15 liquidity, you buy to the upside until that yellow line, which is 150.918. So I expect USD GPY to tap that level of 150.918. Yeah, so this is like an XA EG that has been with you in this video. Yes, I hope you've grasped something, even though that we are missing more about the time frame coordination, but don't worry about that, because we're going to explain it more to you in the coming videos, whereby I'm going to be open to you on the way of using this strategy, and it is so simplified. It is so simplified. It is so simplified, as you will see. So I close up as like an XA UG.